Hello everyone. Today we are diving deep into Nigeria's new tax laws. We're going to look at what things are changing, what's going up, what's coming down. We're also going to talk about how this tax law changes may impact you as an individual that pays, payroll taxes, or as an investor either in stocks or real estate, or if you're a business owner. We will talk about how this tax law changes may affect you, and then we will also talk about what is in it for the government. By that I mean, what are the reasons the government is giving for making all of these tax law changes. It doesn't only apply to those that live in Nigeria, but if you have some form of investment in Nigeria, or if you run a business in Nigeria, these tax law changes may also impact you. And I'm not here to pick sides, so I'm just here to share information on all of these tax law changes and help you understand how you may be impacted as a business owner, as an investor, or as somebody who works a 9 to 5. But before I continue, let me introduce myself. For those that do not already know me, my name is Wura, W-U-R-A. I'm a certified public accountant. I'm a tax and finance expert, and I am the best in financial literacy. If you haven't already, please click the subscribe button and subscribe to my YouTube channel. Also give a thumbs up so that we know that you enjoy, or you learned, or you gained something from the information or from the videos that we would be sharing. And also please share this video with anyone and everyone that you know that runs a business or is an investor, or even your friends that work a 9 to 5. And these are the biggest tax reforms in decades. So if you're a taxpayer, you're a business owner, you're an investor, this video is for you. So let's get right into it. Imagine you earn 350,000 every month under the old law. After all your deductions, you will probably pay about 30,000 in taxes. But with the new tax laws coming in 2026, that same person, that same amount could now pay closer to 45,000. Of course, this is depending on your rent and your benefits, or the deductions that you have. So why all of these changes? This is the question that crosses all our minds. Why these tax reforms? Let's take a look at how all of this new tax law even came about. On June 26, 2025, President Tinubu agreed to the 4 new tax reform bills, which together overhaul the entire Nigeria's tax law system. These acts essentially consolidated and repealed many of the existing tax laws and put them all into one unified structure. Now, this unified structure is exactly where we are going to start from. So the very first thing that we are going to talk about is the unified tax code, or you can call it the tax harmonization reform. So what is changing under the unified tax code? Currently, Nigeria has over 60 overlapping taxes and levies paid at the federal, the state, and the local level. Now, this is according to the Presidential Committee on Fiscal Policy and Tax Reforms. But in 2026, the government plans to consolidate all of these taxes and levies into fewer and clearer categories under a unified tax code. Now, what does this mean? This means that instead of paying multiple levels of government, different taxes, different levies, you have, for example, the local signage tax, you have your business premises levy, you have your environmental levy, and so many others. Now there would be a single point of collection and a harmonized list of approved taxes. The goal is to reduce the multiple taxes and also to reduce the harassment that citizens get from local agents. Also, another goal of the government is to improve the ease of doing business, to increase voluntary compliance by making taxes more transparent. Also, there would be a single registration and filing portal for most of the taxes. So you wouldn't have to, go to different places to pay different taxes. You will now have a single registration and a single place to pay most of these taxes. Also, there will be transitional provisions to grandfather some of the existing assessments, but then it would revoke duplicate local levies. And then finally, it's a mechanism for revenue sharing between the different tiers of government. So now the federal government would share revenue with the state and local governments, based on a formula that will be agreed upon. Now, what are, the impacts for, the economy as a whole, for individuals and for businesses? Now, economy-wide, it would encourage, or it is supposed to encourage, formalization and, it should also lead to a reduction of compliance costs, especially for small and medium businesses. For individuals, it will, or hopefully it will, reduce the confusion that citizens get on who to pay, on what to pay, and then it would also reduce the risk of double taxation, because really sometimes you've paid a tax to the state government and then someone from the local government comes to ask for the same thing or to ask for something that is really similar to what you've already paid. So the hope, or one of the goals for the government, is that it would reduce the confusion on, okay, who do I pay these taxes to? What is this tax meant for? And then, am I getting taxed already on something that I already paid for? For businesses, the government is hoping that it would lead to simpler filing and fewer multiple levies from different authorities. So again, the same thing as individuals, right? It would reduce that double taxation, or the government is hoping that it would reduce, double taxation. It would make filing your taxes also easier than it currently is. As a business owner, these are the things that you can do to make sure that you are in compliance with the new tax code. For the purpose of this video, you can call it your compliance action checklist. Number 1, map your current levies. So prepare a register of all the taxes and all the levies that you've paid in this year 2025 across the federal, the state, and the local governments. Actually do this for the past 3 years, right, at the minimum. But even if you can just do 2025 and 2024, that's also okay. When you're doing this register, make sure to include the amount that you've paid, the frequency. So are you paying it monthly? Are you paying it quarterly? Are you paying it yearly? Also write down the paying authority. So who are you paying it to? Is it the federal? Is it state? Is it local government? What office? Get as detailed as you can. So again, map your current levies, prepare a register of all the taxes that you've paid. Go back 3 years, but 2 years is also okay. Make sure you write down the amount, the frequency, and the paying authority. The second thing to do as a business owner to get ready for all of these new tax laws is to reconcile all your details with the CAC. So make sure, your BVN, your TIN, all your details, make sure that it is all the same across the board, right? Make sure you have the same identity so that you're not running into any issues with this new system. The third thing to do is to engage state tax authorities where your business operates. So if you're operating your business in Lagos, engage the Lagos Inland Revenue Service and then ask them questions, right? Ask as much questions as they are willing to answer, and then keep copies of any local approvals or permits that you've already gotten before this tax law goes into effect. Number 4, Update all your accounting SOPs to reflect these new tax codes. Also create your new GL codes in your accounting system so that you have everything ready and you are good to go. Number 5, you must know that even though it reduces, you paying taxes multiple times, know that you still have to be careful of transitional mistakes. So, be careful. When this new tax law comes into effect, don't rush to do things. Make sure that you're catching whatever mistakes there might be, both in the system and, from those that are doing your books. Also, make sure you audit your books to verify all the historical payments. You want to make sure that at the point, before this new tax law comes into effect, you want to make sure that you're up to date on all your payments. You want to verify that you've paid all of these things and you do not owe, any amount in taxes. Now, there is a risk of, local governments attempting to collect, taxes that are pre this new tax law. So that's also something to look out for. What you can do is to obtain written confirmation of receipts, negotiate transitional waivers, and escalate to state tax tribunals if necessary. Again, there is the risk that your local government might still attempt to collect pre-UTC, the Unified Tax Code arrears. So, they might still want to collect money from you even after this new tax law comes into effect. So what you need to do is to obtain written confirmation of receipts of taxes that you've paid, negotiate transitional waivers, and escalate to your state tax tribunals if this is necessary. So let's go right into the actual tax updates or the new tax laws that you are going to see. The very first one that I want to talk about is the digital economy and e-commerce taxation. Now, the significant economic presence rules will now apply to foreign companies with Nigerian users. They may be treated as having taxable presence if they derive substantial revenue from Nigeria or have a digital marketplace with Nigerian customers. So for folks that get money off YouTube, that gets money off TikTok, now these guys will have to comply with the Nigerian tax laws. Now there will be VAT on digital services. Digital platforms will collect VAT at point of sale and they will remit this to FIRS. Local suppliers also selling through foreign platforms will also be affected. So Etsy, for example, if you're in Nigeria and you sell on Etsy, now Etsy will be required to collect VAT from your customers and they have to, remit these taxes to the FIRS. Also, these changes applies to foreign tech companies like Google, like Netflix, like Amazon, like Meta, YouTube. So those that, again, like I mentioned, make money off, TikTok, makes money off any of the Meta platforms, make money off YouTube. Now, you're going to be charged taxes, and then these foreign companies will now be required to remit these taxes to the FIRS. So by 2026, these companies must collect a 7.5 VAT on digital services sold in Nigeria and then remit this VAT directly to the FIRS via an automated system. Local e-commerce and content creators will also need to comply with VAT and CIT on their earnings, even if you earn on a foreign platform. Again, let me say that. Local e-commerce and content creators will also need to comply with VAT and CIT, so company income tax, on your earnings, even if you earn via foreign platforms. So again, TikTok, the Meta platforms, YouTube. Even if you earn money on a foreign platform as a content creator, or someone that sells on an e-commerce site like Amazon, or like Shopify, or like Etsy, you are required now from 2026 to comply with the VAT and the CIT tax laws on all your earnings. Why this change, right? Why do you now have to pay taxes on e-commerce or on your content? They are hoping that it would ensure fair taxation of digital activities that generate income from Nigerian users. So they are saying, as a Nigerian, you are making income for these foreign companies, income that is going into their countries, and Nigeria is not getting a share of your income. So now Nigeria wants to get a share of your income or the money you make, even if you're making it on a foreign platform. They are also expanding the tax base in a fast-growing online economy. So again, how does this impact you as an individual or a digital entrepreneur? For you as an individual, you can expect higher subscription or service fees on foreign digital platforms. So again, if you're selling on Etsy, Etsy is likely going to increase their fees. Or if you are a customer buying from Etsy, you can also expect to pay more money in form of taxes. So again, expect higher subscription or service fees on foreign digital platforms. This is how it will affect you as an individual. For you as a digital entrepreneur, you need to register for VAT and you need to file your returns, even if you're only operating online. Even if you do not have a physical store or a physical presence, you still need to register for VAT and you still need to file your returns. For the FIRS, they are hoping that it improves visibility of online transactions and that it makes taxes easier to collect from these foreign entities. So again, you're making money for these foreign entities and the money is going to the foreign country, and the government feels like they are not getting enough from the revenue that you're making for these foreign entities. Technically, that's why they are putting this law into place, so that they can now collect taxes from you from the revenue that you are making. Now let's talk about practical compliance details for businesses. So again, you can call this your compliance action checklist. For local businesses using foreign platforms, ensure VAT treatment of purchases is correctly recorded. For local businesses using foreign platforms, so again, you're a local business but you sell on a foreign platform, and again, I'm using Etsy as an example because I know there are lots of Nigerian sellers that sell on Etsy. So again, you're a local business, you sell on foreign platforms or you use foreign platforms, ensure that your VAT treatment of purchases is correctly recorded. So make sure you're catching, the products or the services that, your customers are paying VAT on. Make sure you're properly recording the amount of this VAT so that when it is time to file your taxes, there are no mistakes. You're not underpaying and you're not overpaying. Also, withholding and remittance. Make sure that, again, like I said, you're charging the correct percentage of VAT, and make sure that you are remitting on time, you're remitting to the appropriate body, and you're remitting the correct amount. Platforms may be required to withhold VAT and possibly WHT when collecting payments from customers on behalf of sellers. So I did a worked example for how VAT works on a streaming subscription. So let's say you're paying a foreign streaming service, assuming you're paying $10 every month, and let's assume that the naira equivalent is 5,000 naira. Currently at the 7.5% VAT, you would be paying an added 375 naira. So your total monthly subscription will be 5,375. Let's say the VAT increases to 10%. Now you would be paying 500 naira as VAT, and then your total monthly subscription will be 5,500. And then for bookkeeping, for a Nigerian subscriber or a company buying service as an expense, right? Now, we're still talking about businesses. We're talking about how you can be ready as a business owner that uses a digital platform or uses an foreign e-commerce platform. If VAT, value added tax, is withheld by the provider, when you are recording your expense, record it inclusive of the VAT, because recovering, the VAT that you pay depends on the nature of the business. It also depends on if it's, for business use or if it's for personal use. But, on the surface, make sure that the expense for that subscription, the expense for that, service includes whatever you pay in value added tax to that foreign company. Let's talk about value added tax increase, and this is the last thing we're going to treat in this segment, and then in the next video I'm going to move to other tax law changes. So what is changing as regards value added tax? There's a proposed increase in the VAT percentage from 7.5% to 10%. So again, what is changing as regards to value added tax? The federal government is considering raising VAT from 7.5% to 10% in the year 2026. However, to soften the impact, basic items like food, like healthcare, like education, like rent will still remain VAT exempt. Again, what is changing with value added tax? There is a proposed increase in 2026 from the current 7.5% to 10%. Why is it changing? And again, this is from the government's perspective, but remember that I am not here to pick a side. I am only just giving or sharing all the information that I've been able to gather. So why is it changing? Why is the government proposing that increase from 7.5% to 10% in 2026? Nigeria's VAT to GDP ratio is less than 1%, and it's among the lowest globally. This increase aims to boost non-oil revenue and reduce fiscal deficits. So the government is saying that the amount of VAT that they collect in proportion to GDP is less than 1%, and they are claiming that it is the lowest among global countries, that it's the lowest globally when compared to other countries. They are also saying that this increase is going to boost non-oil revenue, and it's also going to reduce fiscal deficits. Also, the government said they plan to use this additional revenue for infrastructure and social programs. Now, these are the reasons why the government is increasing VAT from 7.5% to 10%. Now, let's talk about how this is going to impact you as an individual and as a business owner. As individuals, the prices of non-essential goods and services will increase slightly. So now when you go to the store to buy something that is considered non-essential, so like food or healthcare or education or rent, you're going to see that the price has increased slightly. Now, this increase in price might not be from the seller or might not be from the manufacturer. It would likely, or it might be from the increase in VAT, but definitely you can expect to see an increase in your purchase price of non-basic items or non-necessities. As businesses, now you would have to charge 10% VAT instead of the 7.5%, but then you can still claim your input VAT credits. For the government, like I mentioned already, it's more revenue for them, but they must manage inflation risk carefully, because now things are going to be more expensive, for people to buy, and this might lead to inflation where things are just too expensive and people cannot afford to buy things. So this is something that the government has to really watch. Now, implementation tax for businesses, again, you can call it your compliance action checklist. First one, as a business owner, you have to adjust your price. So you have to do a price review. You have to recompute your retail pricing models with 10% VAT, no longer 7.5%, and then you need to model your margin sensitivity. So because you're now charging 10% as VAT instead of 7.5%, it's going to be slightly more expensive for your customers to buy. So you need to decide if you want to take a lower profit margin so that the price is not too much. And then you can also test, keep the price the same and see how your customers will react to it, and then use that to decide if you want to reduce your own profit margin or if you want to keep your price the same and just add, the extra taxes on top of it. You can also decide if you, want to run sales at the beginning, of the year, just so that your customers are, they are not getting that shock in the price increase, right at the start of it. But again, as a business owner, this is a decision that you have to make. Next, ERP updates. So update your accounting system, update, your point of sale. Make sure that you are changing the percentage of VAT from 7.5% to 10%, because when you are remitting the taxes to the FIRS, you are going to remit it at 10%, not at 7.5%. So if your ERP or your point of sale system is not updated, you may have to bear the cost of the extra amounts that you forgot to get from your customers. So here I wrote, change your VAT rate codes in your accounting systems and your point of sale terminals effective the legal start date, so that you are not having to pay the difference out of pocket. So make sure that your systems are set to collect 10% VAT from the beginning of when this new tax law goes into effect. Next is customer communication. Update all your invoices so that your customer sees that, the VAT has increased from 7.5 to 10%. If you sell on a website, update all your pricing on your website. Update all your terms and your conditions to show, what things are VAT exclusive, what things are VAT inclusive. So remember that necessities are still exempt from taxes. So if you have a store that you sell both, basic necessities and non-basic necessities, you should have a clear difference between the VAT on what are not considered necessities, and then how much are the things that are considered necessities. So again, update your invoices, update your website pricing, update your terms and conditions to show VAT exclusive and VAT inclusive prices. Finally, your stock accounting. So for the goods that you purchased before the effective date, clarify what the transitional VAT treatment is, right? So if you bought something before the new tax law goes into effect, clarify from, the government, from the tax bodies, if you're still able to charge 7.5% on those items, or if you have to charge 10%, even if you bought those items, before, before the new tax law came into effect. Finally, I did a worked margin example for the VAT, just like I did in the previous one. So let's assume that, before this tax law comes into effect, you're selling an item for 10,000 naira. The VAT is 7.5%. That means that the VAT is 750 naira, right? So this means that your gross sale is 10,750 naira. Now, post the new tax law changes where the VAT is now 10%, if you're selling that same product for 10,000 naira, now the 10% VAT will be 1,000 naira, which means that your customers, instead of paying 10,750, will now be paying 11,000 naira. So this is why it is really important that your point of sale is updated to show this 10% new VAT percentage. If, as a seller, you want to keep your gross price at 10,750, it means that your net price will have to reduce to 9,773, which I know a lot of sellers, it won't be desirable because you also have, targets to meet, you have bills to pay, even business bills that you have to pay, and of course you're in business to make profits. So remember how I said before, to test this new this new percentage, do you want to keep your prices the same and let the customer bear the full the full VAT change, or do you want to reduce your own earnings so that you are keeping your price the same? Again, this is a decision that as a business owner you have to make. But again, I know that it is not an easy decision to make, because we are all in business to make money, and the business has bills to pay, you have inventory to repurchase, you have employees to pay. But just putting it out there that it is something to think about. And this is the end of this segment. In the next video, I will talk about personal income tax reforms. I will talk about corporate income tax adjustments. I will also talk about excise duties and green taxes. And then I will talk about capital gains and property tax reforms. I would touch on, tax digitization and enforcement. I would also talk about transfer pricing, penalties, interest, dispute resolutions, and then I would give a big picture. So remember, we talked about the unified tax code. We talked about how it impacts you as an individual, as a business. We talked about what is in it for the government. We talked about some risk that you might encounter. And then we also talked about digital economy and e-commerce taxation. We talked about why it's changing. We talked about how it impacts you as an individual, as a digital entrepreneur. And we talked about what is in it for the government. We also talked about practical compliance details for businesses, or you can call it your compliance action checklist. We also talked about the value added tax, how it is changing, why it is changing. And we also went over some compliance actions for businesses, things that you have to do to make sure that you are compliant. We also talked about how this is going to impact you as an individual and as a business. And then we did some worked margin example. If you have any questions, please leave your questions in the comments, and I'm happy to answer your questions. In my next video, I would go over more tax law changes that are coming to Nigerians, Nigerian businesses, Nigerian investors come 2026. Thank you. Bye.